So now the component number 2 of the system is exit, also called stop loss and profit taking. We will put our stop loss at the most recent swing low or swing high, and we will take profits in 2 stages. Stage 1 will be the initial profit taking stage, and stage 2 will be the final profit taking stage. Now, first of all, let's look what is swing high. A high candle which has at least 2 candles below it on both sides. Well, let's look at this example. A candle made a high here at this price, and this high candle has at least 2 candles below it, as you can see here. 1 2 1 2, and this is high. So this candle which made a high has at least 2 candles on both sides of it, so it is qualifies for a valid swing point. Now this also qualifies for a valid swing point. A candle made a high here in this candle and has at least 2 candles which are below it. Here you can see 2 on the left side, 2 on the right side, so it also qualifies for a valid swing point. And here this candle also made a high here in this candle and has at least 1 2 1 2 2 candles on either side, so it also qualifies for a valid swing high point. So remember, our entry was breaking of this swing high if other conditions met. Now this is not a valid swing high point because price made a high in this candle, 1 2 on the left side, but here see only 1 candle on the right side, and second candle is not below this high, so it is not qualifies for a valid swing high point. So let's look at what is swing low. Swing low is opposite to swing high. A low candle which has at least 2 candles above it on both sides. Here you can see price made a low here in this candle and has at least 2 candles on either side which are above it. Here 1 2 1 2, so it qualifies for a valid swing low point. Okay, now this price made a low here in this candle and has at least 2 candles which are above it, as you can see clearly. This also qualifies for a valid swing low point. Here it is, another very good example of swing low. Price made a low here in this candle, okay, and has at least 2 candles on either side, 2 candles on left side and 2 candles on the right side which are above this candle, so it also qualifies for a valid swing low point. Now this candle does not qualifies for a valid swing low point because price made a low here in this candle, as you can clearly see. Price made a low here and it has high on 2 highs on the left side, but look here, it has only 1 high on the right side, and the second candle crossed this, so it does not qualify for a swing low point. So the more the candle on each side, the more significant the swing point becomes. Now let's look at the profit taking stage. There are two stages in the profit taking. Stage 1 is initial profit taking stage. In this stage, if the market moves 50% of stop loss pips in our favor, we will take profits from 70% of our position. Well, what does it mean? Let's look at this in detail. If the market moves 50% of stop loss pips in our favor, if we enter the trade and we put the stop loss, we've put the 50 pips as stop loss, then as soon as we get the 25 pips in our favor, we would take the profit. Similarly, if we enter the trade and our stop loss happened to be 60 pips, then as soon as we get the 30 pips in our account, we will take off initial position, and etc, etc. And we will take profits from 70% of our position. Let's say if we traded 10 lots, then 70% of 10 is 7 lots. So as soon as we get the profit target achieved, remember here we put the stop loss 50 pips, and as soon as we get the 25 pips, we will take the 7 off. And if we traded 20 lots, then we will initially take profits from 14 lots, and so on. Here is an example. Let's say we traded 10 mini lots and our stop loss was 50 pips. So as soon as we get 25 pips profits in our account, we will take profits from 7 lots, and 3 lots will be remaining for the second stage exit. So let's look at this in example. So we use the 10 mini lots, so the maths will become easy. So we have the 10 mini lots on, and I want to take off at least 70% of my position off. So if I take off 7 lots out of 10, as soon as we get the 25 pips, remember from our previous example, as soon as we get the 25 pips, we would take off the profit, and it will look like this: $175. So it means that we are leaving 3 lots on. So let's look at the worst possible case scenario. The worst possible case is that you made your 25 pips and then market reversed so fast and hit your stop loss that you get out before you do anything else. So let's look at it in terms of getting loss on this. So we have 3 on, and remember our risk was 50 pips. We will wind up with profit, $25 profit. This is why professional traders want to take off the bulk of their profits when they have it. Now remember, we heard that let the profits run. That's what this position for. We want to keep our position on so we can let our profits run. When you are trading, I can guarantee you one thing is going to happen, especially in the beginning stage of your trading career. Your emotions gonna take over your trading. You're gonna get excited and it is very easy to lose a trade. So this initial profit taking stage will protect you from being stuck in that emotional game. We never know what the market is going to do next. That's why we want to take profits early and leave the small position on to profit if the market continues in your direction. So now the second stage is final profit taking. We will close all the remaining position when 3 exponential moving average and 5 exponential moving averages crosses the 13 exponential moving averages in opposite direction. Well, let's look at the example here. Our entry happened to be here in this horizontal line. As you can see, the FX chart display indicator was crossing 90 and moving averages was crossing up. We have a confirmation on the daily, this 4-hour time frame. Stop loss was about 120 pips. So what is 50% of 120 pips? Is 60 pips. So as soon as we get the 60 pips, we will take initial profit. Here you can see, here we accomplished our 60 pips profits. Now let's assume that we have traded 10 lots, 10 mini lots. So as soon as we get the 60 pips, because our stop loss was 120 pips, so our initial profit level target would be 60 pips. So as soon as we get the 60 pips, we would take off profits from 7 lots because we traded 10 lots. So 70% of 10 is 7. So we got profits of 60 pips. So it is 60 into 70. 60 into 7 is $420. So we initially banked $420, and as we can see there is no exit signal occurred until here. Here all the moving averages crossed in opposite direction, as you can see here, and this whole movement from here to here gave us 630 pips. So our remaining lot was closed at 630 pips. So the calculation is 630 into 3, it will become 1890. So the total is, I'm writing here, for $20 plus 1890 is $2,310 profits. So even with this small position, we made around $630. Sorry, we made around $1,890. So this is very perfect exit strategy, and you will have very few losing trades doing this. Now we have covered the entry strategy and we have covered the exit strategy. So now one component of the system is remaining, which is money management. So let's look at this money management.